This week, inflation is much higher when you count the cost of borrowing.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Okay, inflation is lower. Well, not really lower, but the annual inflation rate has slowed. We covered that subject in our February 20th blog post, Don't Buy the CPI Lie. To summarize, inflation gets baked into future prices and rarely reverses course. In essence, higher prices become the new baseline to which future inflation is added. But inflation is much higher than what the government reports because the Consumer Price Index, or CPI, doesn't account for higher minimum credit card payments or the higher mortgage payments thanks to the increase in interest rates. This is especially difficult for older homeowners and retirees on a fixed income. However, inflation is much higher than reported. Just because the GDP growth and low unemployment are shining on the economic forecast doesn't mean that many consumers today are living under a dark cloud. And this contradiction can be best explained in a new working paper from the National Bureau of Economic Research entitled, "The Cost of Money is Part of the Cost of Living." This paradox between the indicators and the consumer sentiment may explain the increasing American pessimism about the economy. The working paper reads in part that consumer sentiment is strongly correlated with borrowing costs and consumer credit supply, more so than unemployment numbers and annual inflation rates. I couldn't agree more. The economy is booming and everyone knows it, except for the American people, says the working paper. Now, this should come as no surprise since home prices on average are 50% higher today than they were when the pandemic began. And the current average 30-year mortgage rate has increased threefold since 2021. Let that sink in. Americans seeking to purchase a car, they might find qualifying for a car loan difficult at best and certainly more expensive thanks to higher interest rates. To put it simply, there's a divergence between monthly CPI numbers and the American consumer experience. Then there's credit card debt. Older Americans that are carrying a credit card balance are suffering. On average, credit card holders with a balance are paying about 5.25% more than they were just before the Federal Reserve began their series of aggressive rate hikes in the spring of 2022. For example, a card holder with a $10,000 balance only making the minimum payments would be paying about $220 a month with a 16% interest rate before the rate hikes. Today, that minimum payment would be $300 a month with the average 24% APR being charged by most card issuers. To put it simply, there is a divergence between the monthly CPI numbers and the American consumer experience, and older Americans are in fact caught in the middle. Now, that said, I have a closing thought for the reverse mortgage originators watching today. The motivation behind how we approach the potential borrower is key to just how receptive they are to potential solutions for their cash flow problems. Knowing the true cost of inflation, think of yourself as a member of a search and rescue team. You're searching for homeowners who need a solution to their financial predicament, and when appropriate, you're possibly rescuing them from the unrelenting financial pressures and what should be their golden years. Now, what are your thoughts? Leave your comments in the comment section below, and also if you'd be so kind as to share this week's video, you can do that on LinkedIn. Don't forget we have a YouTube channel where you can hit the subscribe button, and if you enjoyed today's video, be sure to hit like. It really improves our results in the algorithm. We're seeing that already, so thanks to each of you that do so. Each and every week, we curate the news that is relevant for reverse mortgage professionals, especially in our weekly podcast, HECM World Weekly. You can listen on Spotify, Apple Music, or on Podbean, and we also have a video companion to that podcast as well. Thanks again for watching us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at Heckam World.